Is watching the news making you a bad investor? That sounds backwards, right? How can being more informed possibly make you worse at investing? But if you're a normal retail investor, not a hedge fund or an economist with a Bloomberg terminal, it actually makes a lot of sense. You've probably heard advice like VOO and chill, VWRL and chill, or my favorite, time in the market beats timing the market. What that basically means is buy a low-cost fund that owns everything, set up a monthly contribution, and then just leave it alone. Don't time the market, don't pick stocks, don't panic, just let capitalism do its thing. And statistically, that works. So why does watching the news actively make this harder? If you think about the set and forget mindset, it's basically outsourcing responsibility. You're saying, I'm not a professional, I'm not smarter than the market, and I'm definitely not beating people who do this for a living. So instead of trying to predict winners and losers, you just own the whole thing. A low-cost, globally diversified investment fund is the usual advice for us simple retail investors. Watching the news can completely break that mindset because the news doesn't exist to make you a better investor. It exists to grab your attention. Financial news especially is designed to make everything feel urgent. Markets are plunging, stocks are soaring, this one event changes everything, this company is doomed, this trend is unstoppable, buy, sell, sell, sell. Jim Cramer's entire existence depends on stoking the coals of the hype train. And so suddenly, even if you were perfectly happy, VOO and chilling yesterday, today, you feel like you should do something. That's the problem. Watching the news doesn't just give you information, it gives you emotion, fear, excitement, confidence, doom. Emotion is basically poison for long-term investing. When markets go up and the news is optimistic, you feel smart and want to buy more. When markets go down and the news is scary, you feel stupid and want to sell. Congratulations, now you're buying high and selling low. The exact opposite of the plan. There's another issue too. The news makes you think you know more than you actually do. You read a positive article about a company and think, maybe I should invest in that. All of a sudden you're a stock picker. You read something negative about a sector and think, maybe I should get out before it gets worse. Now you're a trader. You read about the 12-year-old getting rich off a meme coin investment, and now you're the worst thing of all, a crypto bro. You didn't mean to become any of these things, but the news gently pushes you there. Man, look, some people do beat the market, but what you're usually seeing online is survivorship bias. You see the screenshots, the multi-baggers, the I bought this stock at the perfect time posts. What you don't see are the thousands of people who tried the same thing, failed, and went back to index funds, or quit investing completely. Professional fund managers with teams of analysts and access to far better information than you consistently struggle to beat the market. But somehow, the news makes regular people think, yeah, but I get it this time. So, should you never consume news at all? Not necessarily. News is useful for understanding the world. It's interesting and it's important, but it's basically useless for improving long-term investment returns. By the time something is on the news, the market has already reacted. And by the time you're reacting, emotionally, you're late. The best investors are usually the most boring ones. They invest regularly, they ignore most headlines, they don't touch their portfolio when something scary happens, and they don't feel the need to have an opinion on everything. So if your strategy is genuinely buy the market and hold, then watching the news probably doesn't help you. It just makes you want to interfere. And in investing, doing less is often the hardest but smartest thing you can do to grow your wealth over time.